Hi guys, and welcome back to Ask Rhyce, where I answer your questions about real estate. Today I'm joined with Tim Nicholls.
Morning, Rhyce.
Timmy, thanks for sitting down for a chat.
Not a problem at all. Thank you.
Tim is a financial advisor and he also works in risk. I guess his specialty would be superannuation as well as insurance. So I really just wanted to sit down, pick Tim's brain today, probably more specifics around insurance. And I guess just give people a better understanding of what they need to know when it comes to insurance. Tim looks after life insurance.
Yep, life insurance, income protection, that sort of stuff.
Yep.
Yep.
We'll dive into that a little bit more, and I guess just give a bit more of a more of an overarching theme on not property specific insurance, but just what you should know about insurance policies in general. When you're looking at insurance, I guess Tim's advice as to I guess how to look at insurance, and yeah, hopefully it gives you a better understanding and just an overview of insurance in general and how it might affect you, whether you're a property or investor or for your own personal insurance. So yeah.
Yep.
So
Yep.
Tim, can you tell us a little bit about yourself and
Been providing advice on that insurance side for about 20 years.
Okay.
Now, as you said, life, TPD, income protection, trauma insurance. But here at Austbrokers, we do all insurances. So your house, contents, cars, everything like that.
Everything.
So,
right.
pretty much all insurances we can handle. Yeah.
Okay.
Yep.
Fantastic. And how long have yourself personally been with Austbrokers? What's your...
Been with Austbrokers for 19 years.
Right.
Yeah. So most of the time there, I had 2 years with another group in town. But and prior to that, I did 2 years hard time with the National Australia Bank. So yeah.
You saw the light. Saw
the light. Yeah, that was more of a banking role than an insurance role. So So that's what I've been doing for the past 20 odd years.
Wow.
Yeah.
Well, there you go.
Yeah.
So I guess for me, just to kick us off, why insurance? What's I guess some people look at it and think of it. We chatted a little bit before this about insurance can be a little bit kind of we need it, but why?
Okay, I guess the reason why people have insurance is if you lose a asset, whether that be your income, your house, a spouse, they can't replace that asset themselves. So if you've got enough money lying around and your house burns down and you can rebuild your house, maybe you don't need insurance.
Yeah.
Or if you've got another investment that can provide you with an ongoing income, maybe you don't need income protection insurance. But a majority of people don't have those sort of assets lying around. Lying around that they can just, I don't need that $500,000 in that bank account. I'll just build the home myself again. So most people don't have it, and that's why people have insurance, because if they lose an asset, they need it replaced.
Yes.
So that's the important part, and that's why people have insurance. Banks don't, say, look, you don't worry about your loan anymore, Rhyce, because your house has burned down.
You're a good guy.
That's right. You've still got to repay the loan even if your house is burnt down. So, that's why you have insurance. And the same thing with income protection insurance. Probably your biggest asset you've got is the ability to earn an income.
Yes.
Most people think their house, their cars, but they don't think about the thing that actually lets them afford those assets,
which is
your income
and their income off of that.
That's right.
True. So and I guess especially if you've got investments or property and whatnot, being able to service that if something happens to yourself.
Certainly need something there to, as you said, service the debt and keep it going. Absolutely.
And so on that, if for someone who's unsure, it sounds like majority of people would need insurance, because I would say that it'd be rare circumstances that people would just be in a position where there just wouldn't be a necessity.
Yep.
What about for someone who's unsure if they've got sufficient coverage? What would be your best advice for them? What should they do? How can they kind of get a better understanding of what they do and don't need?
Yep. I guess it's all about what you know. And we'd always suggest you talk to an advisor. Everyone's going to say that. A plumber's going to say, hey, get me around to clear your drains. An electrician is going to come around and say, oh, look, I should do it. Probably legally, electricians should do that. But most people are going to say, if it's a real estate agent, they're going to say use an agent. But for myself, and any advisor, they're going to say, look, we do add value.
Yep.
We add value in our experience. We add value in reviewing your situation to know what... We look at all your situations. So we look at what you've got, your current covers, we look at your superannuation, we look at what options you've got through there.
Yep.
And nowadays, legally, we have to do that.
Yes.
So if your advisor isn't doing that, providing you with all the options and looking at where you can place the cover, then they're probably not doing the right job.
Yeah, okay.
Because, it's all about providing you guys, our clients, the best advice.
Yeah.
And certainly looking at all your options,
Yeah,
we can do that.
Yeah. So if you're not sure in terms of if you've got sufficient coverage or what insurances you need, your best advice would definitely be just seek good advice.
Yeah.
From a professional.
And a good advisor is going to tell you, look, Rhyce, you don't need insurance. You've got all these other assets. Your spouse is going to be fine. Things like that.
Yeah.
And I guess we also add value in the claims area as well.
Okay.
When it comes to claims, we're your, I guess, the middle person.
Yep.
So, and I guess if I'm on claim, I wouldn't want to have to be dealing with an insurance company myself, because you're probably not, well, you're probably dead, so you're probably not going to be able to do that. But if you're off work and feeling sick, you just had an operation, you're in hospital, the last thing you want to be doing is talking to an insurance company.
Yes.
So to have someone doing that, facilitating the claim makes sense. And we've got experience in that.
Yeah.
We have claims every year, whereas obviously for your own policy, hopefully you don't have to have
claims. Yeah.
But we have connections with the insurance companies as well.
Yeah.
So that's the important thing, is to know. We know policies, so we know when there should be a claim paid and when there shouldn't be a claim paid.
Yeah.
And that's what you pay for.
Yeah.
And that's why you have an advisor rather than doing it yourself.
Yeah. Which is an option these days. I mean, we were chatting about some of the, I guess, insurance companies that are out there where it is very much, you just go direct, which I'm sure, the time and place. But I think that's really key point there. I mean, if something's happened to you, the last thing you want to be doing is having to deal with an insurer. I think, and it'd be great having someone to go into bat for you, and
that's what
who's got experience. Yeah.
And that's what it's all about. And sometimes I've found in the past that the direct or your online covers, they advertise that they're cheap, but really they're not.
Yeah, okay.
That's the So sometimes the policies you get online are the same as what you'll get through an advisor.
Yes.
So to have that person there providing the advice, finding the policy that's right for you, because different definitions work better for different occupations as well.
Yeah.
So that's important to make sure that you're getting the right thing. Right policy.
And like a lot of things, and we come across this a lot from a real estate sales side of things, especially. People obviously have the ability to sell their own property if they wanted to, which is perfectly fine. But or go with a discount or a cheaper agent. And I guess like most things in life, it comes back to typically you'll get what you pay for. Yep. It doesn't necessarily mean that having advisors ends up being more expensive. I think a lot of times you end up being far more cost effective.
Yep.
And you've got someone there that you can actually lean on and rely on. So,
Yep. And we structure policies to suit clients as well. So we know how you can structure a policy, whether it's using your super fund or whether you have it owned by yourself, and we take into account how that will affect your estate as well.
Yeah.
So, if you've got previous relationships and so forth that may have a claim on your estate, there's different ways you can structure it to make sure the money goes to who you want it to go to, which is just as important as having the right policy.
Exactly right.
Because you don't want the money going to the wrong person.
No. So while we're talking about policies, Tim, what makes a good insurance policy? So we briefly touched on going direct, and you might have like an online insurer, for example. But and you talk about as an advisor guiding people through, and obviously you can use your knowledge of policies. But what makes a good policy? Yep.
Well, insurance is all about definitions.
Yes.
So you want to make sure that the policy that you've got gets upgraded constantly. So all insurers bring out, upgrades to their policies. We mainly see that in your income protection and trauma space.
Okay.
Generally, your life covers, there's nothing else they can upgrade.
Don't change. Yeah.
They generally might fiddle with a terminal illness benefit or something like that.
Yes.
If you have to die within, being diagnosed to die within 24 months,
Yes.
some policies pay out then. But really, life insurance and your TPDs are pretty similar these days.
Okay.
But trauma and income protection, they do change a bit with medical advancements and so forth.
Yes.
You want to have your policy that's guaranteed renewable.
Okay.
So some policies say if you have a claim, they can review your policy. So it's like your car insurance.
Yes.
So if you have a DUI, driving under the influence, they say, look, they could change the premium they charge you. Okay. But with your life insurance, your income protection and so forth,
yes.
if you have a claim with a guaranteed renewable policy, they can't say, oh, look, you've had a claim for your back, Rhyce. Sorry, we're not going to pay any more claims for your back.
Okay.
So they've got to keep paying claims for previous medical conditions as long as you didn't have them before you took out the policy.
Yeah.
So that's important to have that guaranteed renewability, to know that, okay, I've had that heart attack. I know that my insurance company now isn't going to cancel my life insurance.
Yeah, because of something that's happened after you've signed.
After you've taken out the contract. Yep.
Yeah.
And the other thing is about underwriting. Okay. So a lot of your direct policies underwrite at claim time. So you'll see advertised on TV, no medicals required, no medical statements or anything like that.
Yeah.
In the end, they're going to underwrite it at some time.
Yep.
So generally you find that's at claim time.
Yep.
And the last thing you want to do is have a claim and find out you're not covered. So to have the underwriting done
ahead of time.
At the front, start of the policies, and then at least you know what you're covered for and what you're not covered for. You go, okay, I've had a previous back injury, so I know my income protection or my total and permanent disability isn't going to cover me for my back.
Yes.
And at least you know about that and you can plan around that.
Yeah.
Whereas a lot of your direct policies just don't do that.
Okay.
Yeah, they underwrite at claim time.
At the claim.
Yeah. And so essentially you've been paying for a policy that you're not going to get.
You're not going to be able to claim on because,
Yep. Yeah.
So that's what makes a good policy. Insurance, I mean, you were talking about, that insurance is, well, some of them, not so much life insurance, but other ones evolve over time as technology changes, as how we function as a society changes. What's your predictions for the future of insurance? I mean, there's conversations that I've heard in terms of that insurance is, in the future it will be a really hard thing to kind of just try and make it work logistically.
Yep.
Like, what's your understanding, or what are your predictions for the future of insurance? That's a big question.
Yeah, it's a big question. We answer all the big questions here.
Yeah.
Look, it's all about, I think, in the future.
Yeah.
The policies we've got here in Australia are really good, especially when you compare the covers to what they get in America and so forth.
Okay.
Our income protection policies pay you right through to 65. Very difficult or impossible to get one of those in the USA, in the States. And so unfortunately, because our policies are so good, the income protection and the trauma policies, we've seen big premium increases in that.
Okay.
And the reason why we have premium increases is because people claim on the policies.
Yeah.
And of course, everyone tells me, I haven't claimed on my policy, but unfortunately, people do claim on them.
Yep.
And that's why premiums increase, because insurance companies have to keep...
If they've got to pay out, it costs money.
That's exactly right. So they've still got to make money, unfortunately. They've still got stock shareholders, to pay dividends to and so forth. So they've still got to show a profit. Yep. There's not too many companies that actually show a profit on the income protection side.
Okay.
Just because they pay out
and I guess that was kind of like some of the conversations I've had. I can't remember if you and I have spoken about it, but moving forward, I guess, so that side of it, you see that becoming more expensive. Just recently, a lot of companies have gone through 10-15% increases in premium on that income protection. Life insurance, they've pretty much got those rates nailed down. They know pretty well how many people are going to die. Unfortunately, and which age groups and so forth. It's only those, and they're natural disasters and so forth that occur, but they've got those rates pretty well much screwed down, so they know what that's going to happen. We've found that your industry funds have recently gone through big increases on their life and TPD rates, and I guess advised products have become far more competitive than what they were previously. And it comes down to claims. It was always going to happen. It just had to
flow through the system. So
Just took some time.
yeah, it just takes some time. And so what we're finding is that as a price point, we're much more competitive than what we were once upon a time, and we offer better cover as well, better definitions and so forth. But as far as products go, we've probably seen a trend on that trauma side to what they call a severity-based definition. So rather than the policies these days tend to be an all or nothing. So, have you had a heart attack? Does it meet the definition on your policy? No, it doesn't pay out. Your severity-based ones essentially say, look, you've had a minor heart attack, so we'll pay you 15% of your sum insured. Okay, which is probably not a bad way to do it, because it's probably more reflective of the loss,
what's happened,
of the loss you've had. Because insurance is all about putting you back into the position where you were before. It shouldn't be about putting you back into a better position. Or
worse.
So your insurance isn't going to, if your house burns down, you've got a 4-bedroom house now or a 3-bedroom house. They're not going to
give you an upgrade.
They're not going to give you an upgrade.
That's
exactly right. No. So they're not going to do that. They're not going to build you a 6-bedroom house. So that's what. That's right. That's what insurance should do. It shouldn't put you in a better position, but just should cover a loss.
Yes.
That's what it's about.
To put you back to where you were prior to that loss.
So that's probably where we're seeing the most change in insurance products, is a move towards that severity-based trauma.
Which sounds like a good thing.
It helps. What it does help, it helps the insurer control the costs as well. So hopefully premiums can be more stable, which is what you want. Because you don't want to receive a renewal and your policy's gone up 15-20%. And that's just too much of a shock for most people. So that's where I see.
That's where you see the biggest changes.
On our side of it anyway.
Fantastic. All right. Well, Tim, thank you very much for having a chat today.
Thanks, Rhyce. Appreciate it,
guys. I really hope that was helpful. Tim's a great source of knowledge when it comes to this space. So, look, if you have any questions whatsoever on today's conversation or any other questions for Tim in terms of insurance, feel free to post them in the comments below. I'll also link up Tim's contact details. So, if you have any, if you wanted to talk to him directly, you'll be able to do so. And guys, I just really hope you got something out of that. And thanks for watching.
Thank you.
Talk to you again soon.